Okay, so you're a new corporation and you need to decide when your fiscal year end is going to be. If you don't choose 12 months after incorporation date, the small business rate needs to be prorated. So here's a real case study on how we helped this new business, who's hitting it by the way, to determine what their fiscal year end needs to be. Originally, we were going to pick a January 31st year end because this is a bit of a slower time of year for this corporation. When we looked at the numbers, however, they had a really exceptional beginning months of their business, and the earnings that they had with the prorated small business rate had them paying tax above the small business deduction rate. So what we did is we said, if we extended the year end by a month, how would this look? Now, why this could be a positive impact to you as a new business is that you get more small business rate by extending another period of time. So each month you extend your fiscal year end, you would get about $41,000 of extra small business deduction limit. So for this business, we extended it another month. And even though they made over $70,000 more gross profit in the business, their expenses were over $100,000. And in combination with the extra small business deduction limit that they get, the business was actually in a better position because they were still under the small business deduction rate. So all the corporate tax that they were earning, if we chose a February year end, had them under the small business deduction and paying it at nearly 12% tax. Under the other scenario of having a January year end, they had higher earnings during that period and they were paying the rate above the small business deduction rate. So a bit confusing, hopefully that makes sense. The point of the case study is that choosing your year end the first year can be very strategic and should be strategic based on your small business deduction rate and what your earnings and expenses are during this period.